Oh, wait. Hey. Costco reporting 58.5 billion in revenue. That beats the 58.1 consensus estimate. Headline EPS 378 for Costco.
Market wrap for today's session. Wall Street traders sold stocks and bought bonds after the latest
Non-GAAP EPS 85 cents a share for Costco. For COO Charlie Oscar reporting non-GAAP EPS of 85 cents a share. That's a 2-cent beat.
Cap reporting 3.4 billion in revenue, beating the 3.3 billion consensus. On Gold Pop this year.
For the Fed to begin lowering interest rates this year. However, this could imply a weaker consumption, which would be a source of concern for corporate America. The S&P 500 fell to around
Cap earnings at 41 cents. It's a big beat of a 14-cent consensus. Gold Pop this year.
U.S. officials have slowed the issuance of licenses to chip makers such as NVIDIA and Advanced Micro Devices for large-scale AI accelerator shipments to the Middle East.
Cap shares moving higher on the big earnings beat.
Salesforce fell 20%.
Yeah, big earnings beat, huh?
Can
I get a mic check out there? If anybody's out there, yeah?
Echo Sierra.
And a screen check too, please. We're working good. Thank you. One second. I'll be right there.
From the Cap press release saying comparable sales were positive at all 4 brands in the portfolio. And net sales up 3% versus a year ago, with gains for the 5th consecutive quarter on sales for Gap.
Thank you. Let me mute a couple things here. All right, so you got some earnings out. I heard in the background Gap, big beat. Ooh, the new and improved Gap. Costco is out. Costco down a little. I mean, that's no big surprise, really. That thing's been up every day. The other guys come out yet? Marvell down and Dell. Yeah, look at that. There was some decent amount of Dell protection too going into today. All right, let me run through some of the more important big picture stuff quickly, and then we'll look at some individual names. Believe it or not, there are a few individual names. I think the issue, kind of what we were talking about last week, the fresh batch of newish names out there. In other words, names, new setups, or new names to catch aggressive buying. They're not really that new anymore, and they've rallied quite a bit. Some more than others, but you kind of, if you're in them, great, and you want to see the flow continue to show up there. It's always a good sign for momentum purposes. But if you're looking for new entry points on a lot of these things, they've already hatched, and you kind of have to stay patient and wait on pullbacks, or you don't. And I know a lot of people, out there, especially on the retail trade side, don't want to hear it. And they're going to get away with it until they don't. And more than likely, what's the case is the more they get away with it, the more likely it's going to sting when they do get caught chasing, right? So we'll get into that. Let's take a look at some of the big picture signals here that we look at each and every Thursday, because you got a few interesting things that we were touching on last week and have been playing out. First off, if you remember, we talked about credit market signals. More importantly, we like to look at credit spreads, high yield spreads, corporate bond spreads, as well as credit default swaps. They're really clean gauge on any potential issue that may be lurking in the market. And there really hasn't been any takeaway from there. If you remember, we had the discussion once the Israelis retaliated against Iran, if you remember that whole little debacle we had to go through. Credit markets was signaling a lot of that geopolitical risk was kind of gone, right? And we saw a lot of those credit signals basically just telling us, I hate to use the word all clear, but all clear in a sense that we can look for opportunities on the long side, right? I guess that's the better way to put it. So since then, there hasn't been really much of any takeaway from the credit market signals up until I think it was mid last week. I think we had this discussion Thursday. But what we were seeing is, again, nothing major, but a little bit of divergence from credit market signals and what equity, the price action out of equities was telling us, right? So what you usually like to see is, using the credit market lingo, when credit spreads are tightening, when default swaps are tightening, right? That's a bullish sign of liquidity, right? That's more bullish for markets. That's confirmation of a potential equity rally, right? So if you're seeing equities rally, you want to get confirmation from the credit markets. Those are always the healthiest of rallies. So from time to time, you see divergence between the two, right? Some more than others. And more common is you see a little bit of a divergence where equity markets continue to push higher, and you continue to see that risk appetite in the equity market, but it kind of dried up in credit spreads, right, and swaps. And depending on how long that goes on or how large of a divergence it may be, ultimately determines how big of a problem it will be, right? Most of the time, these small divergences just end up resulting in some consolidation in the equity indexes. Okay, more times than not. So that's the takeaway signal initially when we start to see that divergence, and we saw a little bit of that throughout last week, right? And you can see here prior to yesterday, right? Because I think yesterday or the day before when we saw a little bit of selling in the markets, you had the equity markets. Again, when you look back now, it really didn't go too far, but you had the equity markets continue to push high, especially on the Nasdaq, right on the Nasdaq front and the semis and stuff like that. But you had spreads start to widen out a bit, right, and swaps start to widen out a bit. So what you should see is when equities are rallying, a lot of times you will see this line on the bottom here head lower. Okay, and the divergence is when equities are rallying and you start to see this thing curl a bit higher. Okay, and if you remember, again, we had this discussion last week. Now, what was interesting about that divergence, and if you remember, this will probably refresh your memory, we were talking about, is it really a divergence because the S&P 500, okay, really didn't go anywhere, right? Well, it wasn't going higher per se, even though it still appeared bullish to most traders out there. But the true S&P 500, the equal weight S&P 500, which gives you a cleaner depiction on the overall market. Okay, it's not just three stocks holding it up or pushing it higher. You already had a pretty decent reversal retracement in the true market of the S&P 500, right? And what I'm getting at is, it wasn't really the divergence between what credit market signals were indicating to us and what the equity markets were doing. It was more of what a couple of names were doing as opposed to the overall market. Okay, and that's what we were seeing, right? And that's what we were seeing, and we'll talk about that a little bit because again, a lot of people look at it as bearish, and it's not a healthy sign. Don't get me wrong, but it could also be, if you look at the glass half full, could also end up being a more bullish takeaway for us. And we'll touch on that in a little bit here. Okay. So again, I'm just rewinding back to last week and telling you where we sit today. So fast forward to this week and what we've been seeing, you've had the equal weight S&P 500 already retraced nicely off the upside exhaustion signal that we were talking about, right? And less so on the true S&P 500. Hold on, let me get this off here. Right? And the NASDAQ, which obviously was the strongest out of the bunch, right? So now you're starting to get a little bit of a breather here on these fronts, okay? So that's where we are now. Now we're at a point where, again, we don't want to make too big of a deal out of what we're seeing right now in the credit markets because it's nothing major going on there. But what we don't want to see is we don't want to see a further continuation, especially an aggressive continuation, to spreads and swaps widening out. That would be, hinting towards us there's something larger at play than just a sell-off based on positioning, which I think is what's behind all this. Okay, so again, nothing to take away there. I think the market's catching up. The S&P 500 is catching up to what we were seeing in the credit markets and the equal weight S&P 500 anyway. So that's kind of where we are. And that was the risk coming into this week, right? What you've had, and let's look at, it's a perfect segue to some of the things we look at week in, week out. Where is my, don't tell me I exited out. Where'd my steam room go? Hold on. You gotta be kidding me. Hold on one second here, guys. We were just looking at it. I exited out? I don't remember exiting out. So that's a good segue to a few of the indicators we look at on a week-to-week basis, okay? In particular, hedge funds. Really interesting what's been going on there, okay? Because you have, as you can see on this chart, you have hedge funds getting aggressive on the short side once again in individual names. Okay, so they overall net exposure are shorting individual names. You could see to the magnitude they've done off the SIVB news and situations like that. Okay, but what's interesting is how they are positioned on the long side, on the other side of that hedge. So they continue to short basically everything out there aside from mega cap tech and semiconductor, as they we call it the momentum, the quality momentum bucket, right? So all these stocks that have been up and to the right chart wise, that's what hedge funds are hedging their short exposure with on the long side. But net, they are a lot more short than long in everything else. Okay? So what I think that the end result of the takeaway from something like that is that once you get some unwind from some of the stuff that's been holding up the market of recent, in all likelihood, you're likely going to get some rotation back into all the other stuff, right? So the indexes may appear to be weaker than they are, right? Because you're going to have some of the crowded names maybe act more heavy than they have been of recent. But underneath the hood, we should see rotation into a large part of the market. Now, again, depending on how aggressive that rotation is, ultimately will determine what the indexes look like, how bullish it may be. But what I'm getting at here is I think the bullish takeaway from this is that when the big guys do crack, and maybe the start of it we're seeing right now, good possibility of it, it's likely going to result in rotation than what a lot of the perma bears are thinking is the end of the world. Okay? And the reason being is they are already short a lot of the other stuff. Right? So if the other stuff comes down with the hot stuff that's been holding up, they're more inclined to cover some of the stuff that's been weak already and has been shorted already off any retracement. Okay? So that's something interesting to keep an eye on, right? Now, we had a few catalyst bulls in the air. You had some tech earnings. They don't look too hot. The reaction to it, that's all that matters. And tomorrow you got the Fed's favorite inflation gauge, which is the PCE, which is likely also going to have an impact on things, okay? But from what I see right now so far, that's all that it looks like. It just, I think we're in a market now where the positioning has become so crowded in very specific areas of the market, while the rest of the market still continues to be significantly underowned. And there's legitimate reasoning for it, right? Because the growth in the fundamentals, like we've discussed week in, week out, they are in those hot momentum, crowded, quality names, okay? That bucket of names continues to grow. We see it continue to grow, right? We see a few names we'll talk about today that are in the midst of being added to that basket, right? But there's still so little of them compared to the rest of the market and the stuff that relies more heavily on the macro side, the economic side, right? And that's why more than likely what's holding a lot of the other stuff back from participating in a legitimate way is more than likely rate cuts, right? Yeah, we don't know that for sure, but that could be one of the main hurdles behind a lot of the under the hood stuff that people like me like to play. Okay, but again, there's good news and bad news, and that's the type of market we've been in. You get these pockets, small pockets of the market that get overheated and are really crowded and need to digest, and we see them digest from time to time, right? And if the market's going to act bullish off of that, you're going to get rotation into other areas, right, that aren't nearly as concentrated and are underowned. But ultimately, going back to those quality names off dips has been the way to go up to this point, right? That at some point is going to end. These charts can't just keep going up and to the right forever. But up until this point, you know, looking for opportunities off consolidation and pullbacks in these hot areas has been the trade. Okay, so that's where we're kind of at. We're kind of at big signal wise. If we didn't see the market crack, right? I think this discussion would be more bearish in general because we would need to see that happen, right? The more we went on, or the more the indexes melted up in the face of what we were seeing, there would have been more risk that came along with that. So I think now that we already have seen the equal weight, the true market already crack, we've already seen a lot of different areas of the market in practically correction mode in a lot of areas. The missing link was these crowded spots to kind of get hit, and I think that's what we started to see here. All right, so that's on the big picture front. Here are like credit spreads, right? So here are swaps. I like to look at swaps more closely than spreads, but I look at them both. And they've both been signaling for a while now, since last year's October lows. Okay, not prior to that, and the market bottomed obviously a year prior to that, but last October lows, the credit market was signaling something different in regards to liquidity, a Fed put at play, whatever label you want to put on it, right? And that continues to be the case up until today. And that's why these pullbacks end up being opportunities, especially looking for spots of opportunities on the long side. What else I got here? And here's like just a couple things you could see probably need a little bit of cooling off, right? The semis in general, you had there's been the chips outperforming both the Qs and the SPY. You can see, right, that's where all the money has been made. The cyclical semis have been on fire even before some of these more AI related semis got hot. That's where most of the heat's been, right? Outside of NVIDIA, a lot of the more crowded AI semis have been underperforming. A lot of the crowded mega cap names have been underperforming, right? It's been the more cyclical parts of like the chip names and stuff like that that's been just on fire, right? QCOM, ADI, all those areas, right? The more cyclical names. And if you look, I don't know if you guys have looked at a chart like a QCOM of recent, right? And you guys remember they were big laggards, right? They weren't participating at all. They just got way too hot too quick. That, along with some of the AI names rallying, in the recent weeks create a little bit more heat than we really would like, right? So again, just simple ratio chart, semis as opposed to everything else out there. Here's what I was referring to in regards to the hedge fund long portfolio that Goldman pointed out. You got pretty aggressive weighting here of recent too, right? Again, a lot of times you see, bears take it as the end of the world, but a lot of times it just results in digestion or some correction. I'll give you an example. The Mag 7 trade in general, you guys remember we talked about it ad nauseum, was the most crowded trade on the face of the earth. It was ridiculously crowded. It still is, but it was even more crowded back when we were talking about it a few months back, right, on these webinars. And you see what they've done there, right? That Mag 7 trade, it's done now. It's no more Mag 7, right? You're lucky you got Mag 1 or 2 out of that group right now over the last few months. So when things get overowned, you think of it logically. If they continue to rip the way they've been ripping, that means the whole entire world who's in it is going to make a fortune. And that usually doesn't happen, right? The small instances when it does happen usually blows up in their face and they give it all back. So that's just how the markets work. Here, again, just NVIDIA, right? You had it off the split news. I get it. NVIDIA, the best, AI, blah, blah, blah. But it gets a little too crazy. And, off that hype, a lot of people think anything that makes a chip is going to end up being NVIDIA. They start chasing these names with no rhyme or reason. They don't care about entries. They don't care about anything anymore. They just want to be in them. And eventually they get caught. And these option players, all you need is chop for them to lose their money. So this is just showing NVIDIA call option volume exploding again of recent. What else we got here? This is from Goldman again. This is from their prime book data, right? Positioning in mega cap tech, right? So you can see we were at highs after that Mag 7 trade kind of got chopped around a bit. Right? Tesla underperformed for a while. Apple underperformed for a while. You can see how that has come in a little bit. And now, they're back all in a lot of these things. And you can see where that's sitting at now, single stock exposure. Now, think of the hedge fund chart I just showed you about them being net short overall in individual names, U.S. equities. And here's the mega cap tech exposure, right? Just mega cap tech, and you can see how extremely long they are. So they still are overall net short while being this long in mega cap tech. You don't see that too many times. This is a chart, again, just showing some of the credit spreads, some of the credit signals we talk about, and in comparison to the overall equity market, and you can see the correlation here, right? So credit spreads in the red, and it looks like this is equities in the blue. All right, so they kind of give you a good indication of what the equity market is looking like. And we looked at, I saw that chart there. All right. So if anybody has any questions, on any of this, let me know, obviously. But again, just from what our discussion was last Thursday, right? The little concern we had about the possibility of something like this showing up in the markets is here, right? And again, I think the risk was in those crowded names, because the risk always becomes, and here's the issue, right? These names look bullish. There are a lot of names that look bullish out there, okay? And there are a lot of names that still catch flow on a day-to-day basis out there. The problem is when you get in the habit of playing the same names over and over and over again, and you're selling them. You're buying a stock at 80, you sell it at 100, and the next couple of days you're buying it at 120 again, hoping to sell it at 140. You're going to get into trouble, right? And when you start to see that, a lot of times there's either some sort of shakeout or digestion that's needed in the market, because the market gods don't like to let people get away with that for too long, right? And this has been a market, like other bull markets, where you can get away with it more, but overall, in the long run, you're going to get your ass kicked, right? And from my experience, what I've seen and done and seen happen around me is, you may think what I'm saying is useless right now, right? We're in a bull market, it's AI, he don't know what he's talking about, okay? And you don't see the risk of doing that now, right? You don't see the consequences of doing that now. But ultimately, when it's all said and done, right, you're going to realize that it's going to be a correction it's going to be something you want to correct in the future as a player in this game, right? You're going to realize that net, it ends up costing you money when it's all said and done than making you money, right? Something you're going to end up wanting to avoid than keep in your arsenal, right? Because you can be up whatever you're up right now. When you get caught holding a basket of stuff that you kept just chasing higher, and it all comes down in your face and it doesn't come back, all that money you made, a lot of it's going to go poof, right? So when you're all done with the whole equation here, when you get from A to Z, you're going to realize where it wasn't worth it. No matter what you made along the way, it wasn't worth it because you didn't hold on to enough of it. And it's a habit you're going to want to break and not keep, right? So I think that's kind of what it happens is normal in every bull market, whether it's semi-stocks or Cathy names or SPACs, always the case. And when you see a lot of it going on, it's especially when it becomes obvious and you're seeing a lot of it going on in front of your face, usually a time these things need to cool off a bit or rinse, right, and cost people some money. That's all we're seeing. That's all we're seeing. All right, so let's get into new names because, right, again, big discussion we've had on this webinar week in, week out has been the lack of enough of new names behind this bullish price action we've been seeing, right? And the reason why I feel we're seeing so much crowding in a good amount of names out there is because there's not enough of them. Right? There's usually in bull markets, the ideas never stop coming until the bull market's over. Right? And where now it's been a bull market where the same names continue to get bid up, and every dip gets bid up because there's nothing else to go into. Right? And that's what you're seeing with like small caps and a majority of the cyclical names. There are rallies, right? And they can be traded, but ultimately you need to sell them, otherwise you give money back, right? The smooth trips, as we like to say, which usually comes off of fundamentals and growth, it's not plentiful out there, right? It's only in specific sectors and pockets of the market. So obviously the semis have been a big portion of that. A lot of AI-related tech names have been a big portion of it. We talked about utilities recently, right? As that's become, and now you're hearing it even in the mainstream media and even on social, on like Twitter and stuff like that, the utilities have become, right, that power AI trade, right? So we've seen it broaden out, and we've seen more names involved, but there's still not as much as we would like to see or we usually see in true bull markets. All right, so I'll give you a couple of the names that sweepers have been where the most aggressive buying has been at recently. And again, this is the newest batch of names, I guess is the best way to put it. Right? It's not fresh. It's not just now they started to buy them, but this is kind of the new batch of names that we've seen an aggressive uptick in flow. And right now, the best of action is in those names. Okay? The issue, they're at higher levels than where we started to see this action start up. Right? So that's the issue. Kind of going back to what we were talking about earlier. So here's one. This HIMS. We talked about it a few times on this webinar here. They added a fat drug to their arsenal. Even before adding the fat drug to the arsenal, we've seen a pickup in action in the name, right? We've seen some sweeper activity, had a nice pullback here, then the action started to heat up again. But some of the more recent buying, that's where it's been. And this name here, let me get these circles off. As you can see, this thing break out to recent highs, right? But again, stock was what, $11, $12, and it's over 21 today. That's a big move percentage-wise, right? You want to look for pullbacks and digestion to trade these names if you continue to like them. Even better, if you're in them, you want to remain in them, right? You get a move, more of a move, they break new highs, roll your calls. You're in calls, roll them out, roll them up if you want to stay in the trade. What you don't want to do is sell it, right? And then next week, if the stock's 25, you're buying it again because you think it goes higher. And in my opinion, that's what you want to try to avoid, okay? Here's another name that just continues to see pretty decent action, right? And, this is not really my cup of tea. We've talked about this name because we go back to that hockey stick, right? You got this hockey stick going on. But, again, the flow's been there. The flow's been there. The fundamentals have followed along here of recent. You had some huge buyback news recently, right? Crypto has been helping out. But again, another example of a stock right now at higher levels than at any point where we were talking about it. If you're not in it, you want to be careful because you're still dealing with a hockey stick, and you want to try to buy pullbacks or decent lengthy consolidations. If you're interested in the name, remain interested in the name. Here's a beast. This thing turned into a little beast here. Kava. This is a name I was actually in equity. I wanted to hold it. My intentions were to hold it, and I didn't hold it. And this thing has just been unbelievable. I think there were a few of you who were in this name. Are you guys still in this Kava? Anybody in this baby Chipotle? So, this is the prototypical type of stock I'm looking for in bull markets. Okay, exactly this. Okay, where recent IPO, a lot of times they end up being recent IPOs, right? No one owns them. You have no sellers. Nobody's looking at it. There are no eyeballs on the stock, right? Sweepers start getting into the name, okay? All the criteria. And then a lot of times what happens is you'll start to hear people talk about these names, and everybody's going to want to own the name when it starts moving, but it's always at higher levels, right? And there's nothing better than already being in it, right? With a rolled position and taking profits along the way, or whatever the case may be, as that all is going on. We see it in front of our eyes now. You see it on a day-to-day basis, okay? And I get it. You guys know, okay? I'm one of the most humble guys you're ever going to run into in this game. I've been in this game too long not to be. You guys know that. I'm no Ferrari steering wheel avatar guy. You guys know that, okay? So everything that I explain to you or anybody explains to you about doing in this market is always easier said than done. Always. Always sounds easier said than done, right? Always looks easier to sit through on a chart than it actually is. Always. Okay? So I want to put that disclaimer out there. But what you'll realize in this game, especially with traders around you and now you have social media, so you get a better gauge of it. A lot of times when you're seeing the sweeper activity start to heat up, okay, and all that criteria is there that you want to be there, okay, nobody's looking at the name. Nobody wants to buy the name. It's like you almost got to pull teeth to get people. And I know from like dealing just with the steam room, you got to pull teeth to get people to even acknowledge that the name is seeing flow or looks decent, right? Because again, everybody's looking at NVIDIA or SMCI, right? Because everybody's talking about it, okay? And like SMCI is a perfect example of that. When before SMCI became SMCI, right? All those characteristics that are there now that people are excited about were there, right? The company was profitable. The company had crazy growth. The company was seeing flow. The company's chart looked nothing but bullish. But, nobody wanted to pay attention to it because it really, didn't catch their attention yet. And then the stock starts to go parabolic, and what happens? Everybody wants it now, right? That's all they care about. They don't even care about anything else now, right? And you'll see that from the best of companies to even the worst. Here's another example, GameStop, right? When GameStop was catching aggressive sweeper activity and started to look like it was in play, I was getting trolled for talking about the flow on Twitter and in the room, right? I was getting trolled. And now I get asked about GameStop flow on an hourly basis after the name has already exploded, gone parabolic, and crashed back down. Now is when I'm getting asked about the GameStop sweeper activity every hour. Right? But when I was actually trying to go out of my way to show people that GameStop was catching action when nobody was paying attention, nobody cares. Right? Because the move didn't start yet. The move didn't happen. The excitement is not there. So generally, right, you'll find the most success in this game. And again, with the disclaimer, it's always easier said than done. Okay? There's nothing easy about the process. But you're going to find the most success when everybody is not in and everybody's eyeballs are not on it. Okay? Not always, but more times than not, that's where you're going to find the most success, right? The smooth trip that we talk about, the less risk as far as downside risk in a name because there's less sellers, right? If there is any issue that arises. So, and that, throughout my career, and that's where I guess experience, that's generally how I look at markets as a whole, almost to a fault, to where if I feel like there's too many people in something or talking about something or looking at something, I stay completely away where there might be some money to be made, right? So I almost do it to a fault, but that's because I've just been in the game too long, right? But you'll see it over and over and over again, right? And like a name like Kava, okay? Maybe some people have started talking about it now, right? But I can promise you, right, whenever this stock is trading higher and, the volume starts to pick up even more, right, just like at Chipotle or anything else, you'll see more people talking about it and more people interested in it, right? But it always comes at much higher levels here, much higher levels, right? That goes for even a hood now, right? People, maybe there's not as much interest. That's a little different because it's kind of a retail favorite name, so maybe there's more interest. But if this pace continues and sweepers keep coming and the stop keeps pushing higher, you'll see there'll be a lot more interest along the way. Eventually, to a point where it gets too crowded and there's just too much risk. I bought SMCI the mid, yeah, and Mark, to us, right? It makes us sick more than anything else, right? I think that's the part that nobody adds, and I didn't just add, right? I conveniently left out is a lot of times, even when you get what I just mentioned right, you're probably going to sell too early and want to kick your head in. That's usually what happens, right? That's usually what happens. So that's the second part of it. That's even more difficult than the first part. So that's why though the smooth trip is why I like to. I'm always on lookout for these type of names, right? They don't have to be small cap. A lot of them aren't small cap, right? I'm meaning small cap like what people think like penny stocks or single digit price names and shit like that, right? They're going to be less liquid because there are a lot less people involved at the time. But the smooth trip, I think, makes up for it, right? The smooth trip. We saw it again today. Caught more action today. The Shark Ninja December call buyers. No, again, nobody talks about these names. Nobody's going to talk about these names. Very few. Very few. And unfortunately, we're just not seeing enough of this for macro reasons, right? There's not enough parts of the economy where the names are benefiting. There's not explosive growth out there. It's basically AI and some smaller pieces elsewhere. Yeah, I mean, here's the problem, JW, and this is my problem, all right? And I'd be the first to admit it. What looks extended to me almost always, when these type of names get extended and look extended to me, they keep going higher. Almost always. Right? In other words, what I'm getting at is where I would say, yeah, I wouldn't buy it. I'd wait for a pullback. A lot of times what they'll do instead is something like this. Right? Little sideways action and boom, go higher again. Because there's just no sellers. There's just no selling. And that's what you see in a lot of these names. Right? There's just no sellers to be found. Nobody's in these things. Right? And then once people start to recognize the numbers and the growth, right, you get a re-rating in the company. And when there are no sellers, right, when funds are buying and there's no selling, this is what you get. They bid them higher. So yeah, to answer your question, JW, here, no doubt, by any definition I look at, it looks extended here. No, you know what I mean? But that doesn't mean it stops going higher. I'll tell you that much. Put it this way, okay? Would I buy it up here? Me especially, hell no. Okay? But if I was in it and your goal was to, try to milk this thing and sit in it because you really like the numbers or whatever it is, I would hang in it. I would not take the risk of selling to try to buy it back cheaper because we're not that good. That's the problem. That's the problem with these things. But yeah, so this name you guys know, right? And as a matter of fact, I think one of you guys brought this to my attention, if I'm not mistaken, a few months back off a sweep. I didn't even know what the hell it was, this thing. Shark Ninja. Right? You guys remember? I thought it was, what was it again? I thought it was a hairdryer. Remember I was telling you guys a hairdryer stock caught sweeps? And then you guys corrected me, told me it's a air fryer or whatever it was. I thought it makes hair dryers. Shows you how much I know, huh? So yeah, these are the names. I'm trying to think of. Yeah, it is a cool name, right? It always helps when it is a cool name. Always helps when it is a cool name. Here's another one. ONON. Okay, now I'm told by you guys that they make a sneaker or sneakers. I have no idea. Okay, out of Switzerland. Okay, but the flow has been off the hook here of recent, off the hook. You know? And what's interesting is every earnings, it's like the Bears try to find something disappointing about the earnings. Right here, you had earnings, and it's almost like you could see it's like almost manipulated. Right? They try to talk down the earnings and guidance to get cheaper stock, and then they inhale it. Right? They did it here. Here, they tried to do it ahead of numbers, and you can see what happened. And they did it with this one here, too, Kava, yesterday. Look at this. Like Santa Claus came down the chimney and dumped off a bunch of gifts off the earnings, a little pullback. Stock, they sucked it all up, ended up 3 on a day, and then up another 5 today. Huh? So that's what they have a tendency to do in these things. But yeah, here's another name. All right. So kind of to JW's point, this stock just went from 30 to 43, almost in a straight line. You know, I wouldn't buy it here now, but maybe you get a little bit of a breather at some point. You know? You can see it definitely has room, right? This IPO'd in the 40s, came down, and now is building the right side. Kind of like this, right? Kind of like the ARM went public, came down, people lost interest, and then this is where things started to heat up, and now, you know, it's one of the most talked about names out there. So kind of to that point there. JCI, I know that. JCI's been around a while. Johnson Controls. That looks good. That looks really good. That looks really good. A lot of these, well, is this a power name per se? Is this part of that power play, Khalib? Is that what's going on here? Johnson Controls. Let me see. I know this name. This name's been around for a while. Building products, energy solutions. It might be part of this power theme that they're gobbling up. This has been the hottest trade. Goldman absolutely nailed this trade. Nailed it. We looked at names, right? Again, supposedly here's the king of kings. This is the king of kings to that power trade. And what a symbol for it too, right? PWR. Supposedly, if that theme does anything remotely close to what people think is going to happen, they are going to be the biggest beneficiary. And that's probably why the stock looks like this. All right? But you got, again, don't ask me about the details of the business. You guys know that. But I throw them all in the same bucket. All right? This Amphenol, look. All right? The utility names that just keep going is VST. You know, what we've seen now is they've come down the food chain, right? They've come after other names in the group, even laggards in the group. Here's one that's been really active buyers, NEE, and looks like it has more upside. Here's the problem with a lot of these things for me, in a sense, is look at the move on a short-term basis. Right? That's an aggressive move. So usually you get some sort of breather or rinse, right? Either something like this or either something like this. Right? But this bull market in particular that we've been dealing with, and again, I don't know for sure, but I think it has a lot to do with the lack of names behind it. That little breather doesn't show up a lot of times, right? What you get instead, let me get this off now. What you get instead is kind of these little things like this, where there's no sellers, and then bulls sniff that right out. When they see there's no sellers in the thing, then they go, "Teal," Oh yeah, Chegg is. I think Chegg, one of them, Chegg or VST. I think they're the two top names in the group. The two top names in the group. Here's another name that's seen flow that's been hot. NRG. Look at this move. Oh my god! And you see what I mean about these rips, all right? So, and this is what's been most frustrating to me. What's cost me, God honest truth, all right? So, like, you get this rip, and you're looking for some digestion, okay, or some sort of pullback, and here it is. There's your pullback, guys. There's your digestion, and then explodes. So now you're like, okay, what am I going to do? I'm chasing this now, right? And then look what it does here. Overshoots, then here's your pullback. And then boom, here's another leg higher. Right? There's a aggressive re-rating going on across the board in these things. That's what's going on. Look at this. This is shot out of a cannon, these names. You know, shot out of a cannon. So, but this is where the majority of the call sweeper activity that's caught my eye anyway has been in a lot of these names. But like you have a chance to buy them if you like them, and if you blink or if you trade it, right? You bought it, you sold it, and now you're hoping for like consolidation or pullback to get back in. Yeah, good luck. Good luck. You know, so these power energy names have been unconscious, and then it's just been a lot of these AI related names, like a lot of names you guys like, that just every pullback gets bought. Here's one, right? You guys probably have seen me post about even on Twitter sweepers that have bought these little pullbacks. You know, a week of a pullback, a couple of days of a pullback, and ultimately just explode higher again. Explosion. You know, and this is the tough part for me. This is the toughest part for me. You know, it's finding an entry in these things again. This is the tough part for me. All right, because if you buy it and sell it, and you're looking for that next entry in these things, it's almost always coming at higher levels. Now, here's the difference. Okay, the difference is there's a name like CLS, when it starts to rip, there's nobody in this name. You understand? That you don't have that. Now at this point, I'm sure you have some positioning in it. But as this thing starts to move, there's nobody in it. There's nobody in it. You know, and you're seeing it. There's another name here that I was looking at recently. Look at this guy. Like, this is just breaking out. Right? This just broke out. Like, the ideal entry on this, okay? Ideally, even if you're late, it's like right here, right? If you're chasing a breakout. Right? For me, like, the ideal sweet spot would be like right here, off that little breather. So now, let's see. I'm going to throw it to you guys. What do you guys do here? What do you guys do here now? You buying it? Is this, JW, is this extended? I'm telling you, this has been my problem right now. That's what I'm doing. That's what I'm doing. But this has been my problem. Okay? Now, again, this is not SPAC garbage. This is not GameStop. Okay? You look at the numbers on this bad boy and the growth, and it's insane. It's insane. All right? They did $3 here for the quarter. $3 here for the quarter. They're looking for $2.80 here for the quarter. Right? Just based off what they did the past 4 quarters, that's $12 in earnings. It's $120. Is this expensive? Right? Is this expensive? And isn't it amazing? Like, you wonder, like, a stock, like, look how long, right? And it had a killer move off the COVID rally. Look at this move. And this is just, honestly, healthy consolidation. That's what it looks like. But now you got this thing that just recently busted out the new highs. The numbers are insane. You know, maybe you get a dip off earnings coming up, right? Maybe they just meet and don't beat, and there's some sell the news in it. But this is the epitome of the market we're dealing with here. This is exactly what's going on. You see it, or even you see some sweeper activity in it before you can even see what the company does. It feels like these things explode, and even if you get your hands on it, you trade it, you'll never see it again. Never see it again. You guys know this name? Yeah. I mean, with the new numbers they're posting now, they got a multiple like 10. Drew. 10. Pretty crazy, right? Pretty crazy. And if you slap a 20 multiple on it with the growth they're seeing, you're talking about a $240 stock. And that's what happened with like SMCI, right? They did the math. Once these numbers were confirmed that they're legit, like this growth is there, it's not going anywhere. Right? They said, wait a second here. They just reported $6 for the quarter, right? Like $3 the quarter before that, $6 this quarter. It's trading 8 times earnings. And then they just take it to, without even blowing through stop signs, to where it needs to go. And, again, here you go. You got some consolidation again here, right? Just like you had here. So what, I forgot who mentioned it, who said they own it. One of you guys said you owned it. But they were talking about the run before this. Nobody talks about that run. Like, look at this move here in SMCI. Nobody was talking about the stock. All the eyeballs came out off of this breakout. So yeah, there are a few names out there that check all the boxes. It's just not enough of them. That's our problem. Not enough of them. And think about it now, right? The majority of traders out there are looking and playing the same names over and over and over again. They miss a lot of these names. They don't even know they exist. Right? And then they start trading them after. And listen, there's money to be made trading them after they hatch, but buying them and sitting in them, there's a hell of a lot more risk. Like here, okay? And granted, if I pick Nvidia, maybe it's a different tune. But Nvidia has some consolidation too, anyway. But like if you're buying SMCI, especially if you're buying options, and you're looking up here, right, for new entries, SMCI, okay, you may be able to trade it and get out of it and make money with it. But once you get caught in something like this, okay, it's in options, it's equivalent to a crash, right? You know how much premium gets sucked out during this after a move like this? Right? So even if you said, oh, I'm buying SMCI, but I'm going now these days, I'm going far out. Oh, you're going far out? Yeah, I bought monthlies. Monthlies is far out, you know? You're dead. You're done. No, even a couple of months out, you're done. All right? This thing could start moving, you're lucky you get your money back. So that's the risk that comes with it. But now, honestly, and this is now, did I do that right? Yeah, I did that right. This is technically now the second breakout after the second parabolic move. But you are much better whether it turns out to be a winner or a loser is irrelevant in my eyes. You are much better off looking for an entry throughout this consolidation than you were when this thing was red hot and everybody was buying. Much better. Much better. How long it lasts, this consolidation, how long it goes on for, and all that fun stuff, that's a whole other story, right? But, I mean, my advice, if you're looking at the name, you see some good-looking sweeper activity with time, that's your go. I can't promise you're going to see it, but that would be your go. And that can maybe narrow the time down, too, that it's ready to go. But how much more of frustrating, chasers that it has in it, only the market gods know here now. And I'm sure you guys, how many people you know who were trying to buy throughout all this, and there have been trades there. There have been plenty of you, especially in the room, that have traded this thing and made money with it. But if you were holding for new highs and another big move because of fundamentals, right? All of a sudden, everybody became a fundamentalist, talking about SMCI earnings. The earnings are still there. The earnings are still there. It's just a lot more people were involved. A lot more people know about it. And you don't have much of an edge anymore. So, but we'll see what happens. Any other names you guys are eyeing? JCI looks good. JCI does look good. Very similar to a lot of the stuff we're looking at. Cully may need a little bit of a rest here, right? Which it's doing. But other than that, definitely has upside. Definitely has upside. Yeah, I mean, it looks like it's ready to break. Anybody own any of the cyclical semis? Anybody sitting in any of them? I know, Sahil, you got, well, it's not a semi, but First Solar, which has been really nice. You got a re-rating here, too. You got a re-rating here, too. Look at this. Like, you see what I mean? You blink, boom, breakout, and all of a sudden now it's $100 higher than where you were looking. I bought a little iron. I want more iron. I bought a little bit of iron. I think it's $640 something my cost. So if it comes into around there, I'm gonna add. I'm definitely gonna add. Right. I don't know enough of this to get too excited about it. I'm in the equity. I'm in the equity. And here the fundamentals aren't there yet per se, but they're estimates. And by the way, you got some reputable houses which I didn't realize covering the stock. I think Morgan Stanley, JP Morgan. Their estimates are pretty ridiculous, growth-wise. And if that's the case, if they're even close to being right, you're going to have nice upside here, right? So this, for those of you who don't know, this has been a name that has seen action from time to time, especially off pullbacks. And it's a Bitcoin miner slash, what's that called again? I keep drawing blanks. Data center play. It's part of that power group. It's going to 50. Listen, in this market, it looks like all it's got to do is bust 10 to get there. You know? But yeah, this is kind of, of the few little underbelly, undiscovered type names out there. I'm sure there's a decent short position in it. So yeah. Honestly, Ray, even if it doesn't pull back, right? If it hangs out here like it's doing, because again, after I bought a little hoping that it hangs out there for me to own more, and it kind of skipped away from me. At first I was going to trade it, then I held it. If they come in, if sweepers come in and kind of get aggressive with it, I'm not waiting for a pullback. The only thing I was concerned about is you got an upside niner here, and may need to breathe a little bit, and it's doing that. But I like it. I do like it. Another name, we talked about these names a few times now. This is another name that's had some action. Nothing, again, not new. The Circle, you could see where they started buying it. But they've been committed to this name, Clean Spark, for whatever reason. I have no idea. It has what? 1 billion AMT will pull back? What do you mean? Say that again. Right. I didn't understand what you were saying. What will get it to pull back? So what I'm trying to think. Any other names out there? I think the few I wanted to mention to you guys, to keep an eye on off dips with the momentum. I think I have. You got Hood, you got Hins, you got ONON. Those are some of the new names. Yeah, this exactly. It can look dead, like it does these play action fakes. Bill, you're 100% right, and then bink, it just explodes out of nowhere. Maybe Bitcoin, when that goes higher, if it does, maybe that's what gets it. But listen, there's also a good possibility that we see some aggressive sweeper activity right when it's ready. We've seen it before, as you know, Bill. We saw it late last year. Again, that Circle. Just again, I thought it was just a Bitcoin play, but they were hitting it harder than Mara and Coin, if you remember back then. So that would be ideal. That's kind of what I'm hoping for with the IREN, is when they really have that appetite for it, I can add. Now I got a little just in case. That's the way I'm looking at the IREN. Because the same thing with the IREN, it caught action with Clean Spark together late last year. But there's been a crazy chart. Look at right? From 3 to 9, back down to 3 to 8.5 to 4. Crazy movement. So, but for those of you in the room, there's a good possibility, not a guarantee, but a good possibility we see sweepers show a decent appetite for these things when they're ready to go. What we hope is that it doesn't come as a chase, like it came in the past. It came usually when they were doing nothing. As a matter of fact, I remember with the Clean Spark, Bitcoin was down, and they started tattooing CLSK. And I was like, whoa, what are they doing here? That would be ideal if it shows up that way. As far as Bitcoin is concerned, it looks fine. It's just kind of quiet. By the way, the Fed balance sheet came out. Is it updated on here? Let's see. Looks like a little dip. Nope. Is that today? No, that's last week. So you got some decent correlation with liquidity and Bitcoin, obviously. All right, you can see Fed balance sheet increasing here, and Bitcoin ripped, and you can see it kind of stalled out here, and Bitcoin is hanging out. And Niners have been money in Bitcoin. Here's your downside Niner if you were looking for a trade. Here's your upside Niner, and you got a little bit of a breather. For you bulls in the market in general, that would be ideal, I think. If you can get anywhere close to a downside Niner out of this, what are we here? 5? It's possible. They like to front run Niners on S&P 500. See, like here, you got an 8, and then they just bottomed it out already. Let's see, RSP might be even closer. Again, this thing was up today. Crazy. Yeah, you're even closer here. Yeah, so maybe you get a downside Niner in the in equities, and gets the job done. But yeah, for those of you in the steam room, right? And that's the main objective of the steam room. Okay, everywhere else, and the younger traders, obviously they want to follow what the Ferrari steering wheel guys are playing because they think they know what they're talking about, whatever. You shouldn't give a rat's ass what anybody's playing if you're a member of the steam room. Okay, the only thing that you should be paying attention to, right, is the sweeper activity, especially the stuff that I'm making you pay attention to. Forget whether I like it. Forget whether Joe Schmo likes it. All right? If you see any sort of aggressive buying coming in a name, right, that piques your interest, growth-wise, fundamental-wise, sector-wise, whatever it may be, that's what sweepers can do. They can tip you off to momentum coming into new spots before anybody else knows about it. Okay? Now, not every name out there trades options, right? And some trade it more than others. So there are going to be names, obviously, to state the obvious, that don't catch options flow and end up being big winners and crazy momentum and shit like that. But ideally, that's the edge out of the flow, right? It puts your eyeballs on something that usually you wouldn't have eyeballs on. And I think the GameStop example is the perfect example. The perfect example. We all fall into that category, right? Where, at the time, I would never trade those fucking apes. I would never trade GameStop, right? And then all of a sudden, now you're interested in GameStop because everybody else is interested in it. Or Kitty Cat. put out some videos to get people excited. All right, but you see the difference. Okay, look at the difference here. Okay, here when the action started up here, Kitty Cat was nowhere to be found. No, nobody. People forgot GameStop even existed. All right, and again, I'm not talking about one sweep. I'm not talking about two sweeps. All right, I mean, it stood out like a sore thumb that there was aggressive buying in GameStop for whatever reason. I didn't know Kitty Cat was sweeping it, or his buddies were sweeping it, which I think is the case. But you know what I'm saying, right? There was something going on, and then people have just don't really care because they look at this, and even myself, like I'm even trolling myself playing the GameStop off the action, right? But that's how bad the rest of the flow was. I think that's why it even had a bigger impact on me. But then you fast forward it till now, the stock Kitty Cat sent out 6,000 videos of gifts or whatever you call those things. The stock exploded and crashed, and now is when I'm questioned the most by everybody about the GameStop flow. Like literally every hour, if I check messages on social media or people I know or guys filling up my gas tank, right? Not here, and here. Telling me, right, GameStop, oh, did you see all that volume June 20s? Somebody knows something. Somebody knows something? Did you see what the stock just did? What do you mean somebody knows something? Everybody and their fucking mother knows something. Somebody knows something. Who doesn't know about GameStop right now? You understand what I'm saying? Right? GameStop has been active? No kidding. Everybody's looking at it. Everybody's in it. Everyone's playing it. What does that tell us? What edge is coming out of that volume to us? That everybody and their mother is buying GameStop? That's an edge? You know what I mean? And here, right, is the complete opposite. Not as much volume, right? Nowhere near the amount of people in it, but somebody is buying it, and that's your edge. Yeah, and Bill, that's a good point because like Hood is in that group. You know what I mean? Hood is in that group. And listen, guys, don't think this is a shot at anybody. I'm in that same category. You know what I mean? There are plenty of names, they catch action and they've been dead, or I don't like the type of name it is because it was overowned a year ago and I don't play it. Oh, for Hood, for me to even take the Hood action serious, I had to see enough of it. Oh, here's another one. This one. All right? When they were buying it here. This one too. But regardless, that's where that's the place we want to be looking. So to my point, if you are a Steam Room member, the smartest thing to do is not pay attention to what everybody thinks about the stock, and look for what you want to look for and pay attention to the sweeper activity to tip you off when when somebody may see the same thing you may see. A-Lab, it's been quiet, Tobias. It's been quiet there. I haven't seen any action at all in A-Lab. Any action at all. But this is, again, this is what you would want. This is what you want if you're interested in it. You know, this death here, like this is what you want. Now, again, in sweeper terms, all you want to see is them come in and step on the gas. That's it. All right? So that's a perfect example of what I was just explaining to you guys. Whether it's tomorrow, whether it's next week, or the week after. No matter what anybody thinks about this name. Oh, it's dead. It's dog shit. It's this. It's that. That's why this stock is useless. All right? Here, when it was ripping, everybody was calling it the next ARM or the next whatever. Now it's been dead for a month and change. If sweepers come in here and start gobbling it up, that's exactly what you're looking for. Other than that, Tobias, I'm just being honest with you. I can, fake it and pretend like I could give you a breakdown on the company, but I would be bullshitting you. A couple of people told me that NVIDIA is their main customer, I think. They only have a couple customers, clients. I guess that's a negative thing, right? Numbers aren't too sexy, right? But honestly, I don't think for what you're looking for, Tobias, I don't think that matters. If you like the name, you like the potential, you want confirmation that the street, right? Somebody else sees what you may see. Because here's the problem, right? And that's where I think sweepers have been a big help for me, is that I can like a name, or I can see something that looks interesting in a name, and that I can see that same thing forever. Right? The stock may do nothing. What matters more is if the street recognizes the same thing. Right? So that's what the flow ends up tipping you off to. Right? Somebody else's eyeballs are on what you may see, and that's where the momentum may come in. Yeah, but like this, I love, see this like the way it's setting up, Tobias, this is ideal. I love this setup. I showed you guys what annoys the crap out of me. This. Right? Like this is what drives me nuts. Okay? Because now, if sweepers even come in here, like we've seen some sweeper activity, but even if they come in here and bomb this thing, like I don't know what to do with it here. I don't know what to do with it up here. I more than likely will trade it, but I'll be quick and take my profits, right? Because it's already in play. It's already been moving. What Tobias is showing you, like with this A-Lab, and it's got nothing to do with the companies, right? The SNX fundamentally looks 10 times better. So it's got nothing to do with that. I'm talking about the setup. This dead heartbeat, death, nothing going on. Your edge is sweepers tipping you off that's about to change. Right? Where there's already something going on. Right? There's already strong momentum in the name. And then sweeper activity would, I guess be confirming that momentum will continue. You understand? It's not as big as I guess it's the way I look at it, to be honest, now that I'm explaining it to you guys. I just like this setup here, risk reward wise. No matter no matter the time frame, like whether I'm day trading, swing trading, and going back again to the GameStop, right? That's what had the biggest appeal to me, is that you have this thing here literally laying on the ground dead. Okay? There's no bullish momentum in this thing. And then now you have multiple sweeps into the picture, right? That's my ideal setup. You know, even if it's just day trading the thing. Okay? If there's no momentum coming into it on a short-term basis, whoop, I stop myself out, usually for a scratch. Sometimes maybe even make a little bit of money, right? Just didn't explode. But if and when that momentum does show up, right, or sweepers keep coming, you can see how that risk reward is pretty appealing. Yeah, Hims has been a nice one. Hims, you know, Hims has been a nice one, and you got that sexy story to it too now with these fat injections, right? You got the story behind it too. See, I don't know about you guys, Tobias, you've been around. Some of you who traded in years past, I guess it did it here. But a lot of times what you would see is you'd see a move like this, and then you get longer consolidation here, right? But you kind of got it here a little bit. But a lot of times you would see a little more consolidation here, and then it would go. This market, though, yeah, I sound like a grandpa again. This market is just so fast, you know? So much faster than we dealt with in years past. They price in everything like this now. Like that, you know? Any piece of news, anything gets priced in immediately. They don't wait. They don't wait around. You know, and you know what is probably the reason why is people have access to so much information these days, right? If there's information out on a name, everybody knows about it. You know, so they price it in immediately. And by the point after the thing moves and rips for 2 weeks, right, everybody has access to that information. It's just so much quicker now. So much quicker. But yeah, this has been really nice. In this tape, Tobias, no? In this type of tape over the last couple of days, yeah, it's been a shitty tape. Hood too, Bill. Hood, Bill, you're trading Hood though, right? Or are you looking to roll Hood, or are you going to clip it? But Hood too, for this type of tape. That's not too bad. Yeah, this is not a big mover this time. I mean, this is moving nicely. I like this Hood. This is what this you guys know with this. You know what I mean? This is what bothers me with Hood. This is what bothers me. See, if this is Shark Ninja or any Kava or any of those names, you can envision a smooth trip higher. You know, no sellers. You can envision a smooth trip higher. The problem with the hockey stick, you got bag holders who are going to weigh on this thing every time it pushes to highs, every time it bumps up. You know, and you could say to yourself, right, like I was explaining earlier, always easier said than done, right? The chart always makes it look easier. But to sit through that turbulent move is treacherous. It's root canal. I mean, the majority of us, we can't sit in parabolic moves. We're itching to get out. You know? These turbulent moves. And look around, right? Look around. You see these names? Look at this, man. Okay? These are why hockey sticks are so difficult. Look at this. Look at this. Look at this. All right? You zoom in and you're like, oh, here we go. Square. It's ripping, it's going. And then all of a sudden it gets stuck in mud. Yeah, it almost becomes like a new range down here. And when you zoom in, it becomes so deceiving. But that's the problem with hockey sticks, as opposed to clear sailing. Right? No sellers. Anyway. Yeah. You're 100% right, right? And that's a whole other thing, too. You're right. It's like night and day with options, right? The problem is with options, even if the stock just sits there and goes sideways, right? The most constructive consolidation you could find, it's going to cost you money via options, right? It's still going to cost you money. And if you get hit with a pullback along the way, it's a killer, no matter what you own. Like, look at this shot, okay? Net, right? It's been making some ground up, right? But every time it does, it gives a chunk back. Every time it goes, like, what calls are you going to sit in to ride this out? To Isawato's point, right? The point he made. How do you ride this out? You got to do work around it. Like, you literally, if you owned a decent sized lead position, you got to kind of like sell calls when it goes to highs against it, right? Shorter term stuff. It takes work. That's kind of the ranchero trade you got to do. To just sit in calls through this, it's a disaster, right? Because even if your entry was over here, okay, and you're up decent money here, now you're even profitable. Even though the stock's higher than where you bought it. Yeah, exactly. Forget it. It hurts my brain. It hurts my brain. I can't. Not for me either. Not for me. I'm exactly like you, right? If I'm looking for a clean trip, that type of thing, there's nothing wrong with buying calls with some time. I have no problem with that. But like if I'm prepared to sit through some turbulence, I can't do it. In the equity you could do things too with, right? You could do things too if you want to get clever with options alongside it, but hurts my brain when I get too creative. How do you get the niner on the chart? What chart, Drew? From what do you use? TradingView? I think they changed all the names on TradingView. That's why. To get the mark signals, I think now it's, what's it called? Number indicator, I think it's called. They had to get rid of the mark's name. See, like it used to be TD sequential. They had to get rid of all that. Let me see number indicator. I think that's what it is now. Let me see. Number or count or some shit. Let me see. Number indicator. Let's see. What the hell is that? Where'd that go? No? No, that's not. What is that? That's not it. Maybe Count or something. I know they had to change the names. Anybody know what the TD got? They changed. Oh, here. Is this it? Let's see. No, that's not it. Damn. I don't know what they changed it to, Drew. But it's definitely on there. They just changed it. See, the only reason I have this the way it is because I've had it for a while and it never changed. Let me see. Hold on. Oh. Tsunomic. I mean, could they have gotten them all off? They took them off? I don't think so. I don't know, brother. It's under a new label, and I don't know what the hell they changed it to. Yeah, if I find it, I don't know where to hit you up, but definitely next Thursday I'll remember and I'll write it down. And somebody had told me recently what they changed it to. I don't remember now. I thought it was number something, but yeah, they changed the name on here. They changed the name. All right. Anybody have any last questions or anything to add, or any stock that's going from 2 to 50 you want to share with us? I've been saying this for a while. I need a nice, juicy, under $10 number that I can get my hands around. You know, that's what I need, man. That's what I need. I've been waiting for a while. Maybe this iron is it. You know, I don't want to just pull something out of my rear end. I kind of want sweepers to confirm it, you know? Kind of like the Soon back in the day. That was the last time. Well, I've been playing some other ones. Like I bought some of this one here, Bit Farts. I bought some of this. BITF. But you know, I didn't go crazy. I'm talking about like I want one that I can build a nice position in. Nice position. I don't think, yeah. It's not going to be Bit Farts. Anywho, all right, guys, we'll see tomorrow. Don't forget, you got the PCE in the morning. People are expecting it to come in softer. I think everyone's kind of expecting that. But let's see with the reaction, because you got tech earnings too. The reaction to earnings there. So it should be an interesting little wrinkle. All right, but other than that, I think even if we do get a little bit of selling, I think we see rotation and some stock picking sooner than we think. So we'll see how it shakes out. Always a pleasure, everybody. Enjoy the rest of the night, and I'll see the most of you mañana. Oh, come on, JW. The Yanks are looking good. Listen, it's a big if, and like the last couple of years, I didn't like the Yankee team at all. I like this team if they can stay healthy, pitching especially, you know, if Cole comes back. But they look good. Soto's ridiculous, though. Soto is ridiculous. Nice to have a Soto on your team, that's for sure. Yep. Have a good night, everybody. Yeah, Schmidt went on the deal, but hopefully Cole comes back, you know. But Schmidt's been pitching well. The other kid, Gill, has been pitching well. They look good, man. You know, you're going to have injuries. No major injuries. You know, like Cole was a killer. But if they could get him back, it'd be in good shape. Baltimore's going to be a pain in the rear end all year, though. Every time I look, Gunnar Henderson's hitting a moonshot. That Gunnar Henderson. All right, Madden, I'll talk to you mañana. Have a good night, everybody. MMA? No. I don't watch MMA. Baseball, hockey are baseball above it all. Hockey, I would say a second. And then football and hoops. I follow it, but I don't watch it. I mean, I'm not diehard, put it that way. But baseball, I'm a little out of control with, and hockey too. I like hockey. But I never really got into the MMA. I don't know why, just never have. Yeah, Matt, in every sport too, right? Injuries are a killer. No matter how good your team looks, injuries are a killer. You need luck, like everything. Right? If the gods aren't with you, no matter how good it looks on paper, doesn't mean a thing. Jules, I'm coming, dude. All right, be good, everybody. I'll see you guys tomorrow. Enjoy the rest of the day.